Okay, have I got a nice little presentation for you tonight. Now, it's going to obviously all circle back to property, surprise, surprise, from my channel, but I had to get into the Bitcoin debate. Bitcoin, I was talking to a couple of guys at work today, and they were arguing for the Bitcoin, and I absolutely understand the libertarian stance on Bitcoin being a decentralized money, currency, commodity, call it what you will. I totally understand, as opposed to a central bank issued currency controlled by the central bank, its value decided by the central bank, and the quantity, etc., etc. So it's got a really good idea. It's sitting on this thing called blockchain technology, which is an excellent technology. All the different cryptocurrencies have different implementation of it, and I'm sure, and I think it's already being used and taken up by some of the banks, but they're doing it internally, so it's got nothing to do with the value of the actual Bitcoin and all the other coins that everyone's talking about. So these guys at work were actually using all the words that describe a bubble. They were saying how, you know, because people are speculating that because the price has gone up so much, it's going to continue to go up more. That is actually a definition of a bubble, but they weren't really realizing it, that that's what that is. A bubble, a pyramid scheme, or a Ponzi scheme is anything that a lot of people are plowing their money into, with the belief that it's going to continue only because it's gone up so much in the past. It's going to continue to go up more, higher, and that's probably true until it runs out of steam, and the steam runs out when the confidence is lost. So I thought to myself, let me have a look at the Bitcoin chart, and this is a 3-month chart, and then I thought to myself, let's just have a look at the all-time chart. This is in US dollars. So this looks mad. This just looks parabolic. It goes up exponentially. And then I went into Google and I thought, I'm just going to Google asset bubble charts. And lo and behold, the first one that came up, that one in there, bostoncharts.com. Anyway, just randomly I picked the first one, and they got different phases. Now, you can probably see where I'm going with this, because if you've watched any of my videos, and I'm going to link some of them towards the end, so you can click on them and watch them, on the current property bubble, it's exactly the same. It's just moving a lot faster. This Bitcoin thing is moving a lot faster because you can just go and buy it. Right now, there's not very much cost associated with it, so it can go up much higher, much faster, and obviously it can go down much lower and much faster in that respect. So this is just this is where the smart money comes in. This is the first part of the chart and takeoff phase, and then institutional investors come in, and then there's a first sell-off here, and as you can see, that was probably the smart money there when it was worth bugger all. So it's gone up, and then it had that phase that this chart calls first sell-off. It's a bear trap. So you think bear trap, if you don't know what it is, I've done a little research. So it looks like it's going to go into a bear market, but not really. It's only ready to take off, and then it receives media attention. Then there's an enthusiasm, and this is the part where the public plows in. That's exactly what's happening now. And then there's greed, because these guys were saying how they were going to make a lot of money, that sort of stuff. And then there's delusion. I mean, you know, how long's a piece of string? Is this expensive? I don't know. $2,600 US per Bitcoin. You know what? What happens if it's $26,000 per Bitcoin, which is 10 times higher? You'll be laughing at this figure. So I'm not saying it's not going to go up higher, but my prediction, like many other people on the internet, I'll probably cop some flack for this from Bitcoin enthusiasts. But yeah, I mean, it could go anyway. But eventually it's going to drop. That's my prediction, by the way. So again, we got this stop, and then there's a bull trap when it goes up. People start thinking that, you know, it's end of the bull market, or it's a good time to get back into it, because now is a good time. There's a little pullback where I can get in at some nicer lower prices, and then everybody perceives this to be a return to normal. This is the phase where you get the second little top, and then the fear sets in, capitalization, where everybody sells, runs for the gates, and then despair when it actually breaks through the mean value. So it probably pulls back more than it should, and then it comes back up, returns to the mean. So in my prediction, it'll probably eventually go back down to a couple of $100, and it's just going to hover over there, and everyone's going to be asking themselves, where's it going to go next? What do I do with my money? But that was a huge tangent. I suppose we're talking bubbles. I've been talking about the property bubble, and I'm not the only one doing it. I think that Bitcoin is also in a bubble, but I totally digress. So let me share this piece of information with you. I think you're going to like.
Welcome to The Business. I'm Elise Morgan. Coming up on the program, storming the aisles, retail giant Amazon buys one of America's biggest grocery chain stores. And upping the heat, how smaller retailers will hike energy prices even more than their larger competitors. But first, credit ratings agency Moody's has downgraded Australia's big four banks and 8 other major lenders over fears about the housing market. Moody's cut ANZ, CBA, NAB and Westpac by 1 notch from AA3 to AA2. The agency pointed to elevated risks in the household sector as the reason for the sweeping cuts. While mortgage affordability for most borrowers remains good at current interest rates, the reduction in the savings rate, the rise in household leverage, and the rising prevalence of interest-only and investment loans are all indicators of rising risks. The banks affected include Bank of Queensland, Bendigo and Adelaide Bank, and Members Equity. The move comes a month after rival agency S&P Global downgraded almost all Australian banks over fears of a sharp correction in property prices.
Sharp correction in the property prices, that's what their fear is. Now, there was some good news actually yesterday on this same program, where they said that current unemployment has fallen down to kind of historic low levels, anyway, lowest in a couple of years, down to 5.5%, which is good news. They did say that there's a problem with underemployment, and the wage growth is nowhere to be seen. So it's not all good news, but anyway, the number looks good. So there's actually nothing that we know about the Australian economy that should make Moody's downgrade Australia's 4 big banks. Now, for those who are watching this video outside of Australia, the big 4 banks are completely differently regulated. They are really big, and they are Commonwealth Bank of Australia, National Australia Bank, ANZ and Westpac Bank. They're the big 4, and they've just been downgraded from AA3 to AA2, 1 notch down, again without any bad news right now in the economy. If anything, Australian dollar's gone up because the commodities are kind of recovering at the moment slightly. So it's kind of all good news, yet Moody's is really concerned about the property bubble in Australia.
Australia's retail sector has been left shortchanged on the news massive online store Amazon is buying US grocery chain Whole Foods. The $18 billion deal will give the retail giant hundreds of new grocery outlets across the US. With Amazon expected to land in Australia in the next 12 months, investors in Australia's 2 big grocery stores are worried, with shares in both Woolworths and Coles falling today. The surprise move is Amazon's clearest signal yet. It's serious about including fresh food and groceries in its offering. Here's Carrington Clark.
Amazon, the internet behemoth, has gone shopping and bought a supermarket, and it's looking like being a game changer.
If Amazon
Alright, now there's a reason why I'm sharing this with you. It'll circle back to property, trust me.
combined with Whole Foods can figure out how to make that much more economical and actually make money at it, so that somebody can get their entire grocery cart delivered to their door in a simple way, in a profitable way, then yes, I think that's a game changer for sure.
Amazon's $18 billion purchase of upmarket supermarket Whole Foods sent shockwaves through the New York Stock Exchange. Walmart fell nearly 5%, Costco down more than 7%, and today our market felt the same pain.
Coles and Woolworths are scared of Amazon because Amazon can offer lower prices than they do, because they do not need to be in a physical store. They do not need to be in a shopping centre. They don't need to pay mall rents to Westfield.
Today all the major...
Alright, now this is the bit that I wanted you to hear. Amazon doesn't have to be in a shopping center. So what is a shopping center? It's a commercial property. It's many people are invested in it without even knowing, called REITs, real estate investment trusts, and they've been going south. So Woolworths and Coles, to be able to compete with Amazon and Whole Foods, or Amazon's delivery of fresh food to consumers' doors, will have to taper back on opening the new stores, probably close some of the existing stores and make them smaller, or maybe try and negotiate rents with these big shopping centers like Westfields. So again, this is not good news for property.
Retailers were down. Woolies was hit the hardest, down nearly 4%, while Wesfarmers fell 0.7%, even though Amazon is yet to have a physical presence in the country.
Now, how do you think property prices, the energy prices increasing is going to affect consumer behavior? Now, that's called non-discretionary spending. So it's something that we have to spend money on. You have to have power, you have to have food, you have to pay rent, housing, that sort of stuff. So power is one of those. And this next story talks about how energy prices in Australia have doubled in 5 years. And they're going to go up by 20%, I believe, in the next 12 months. So after doubling, in 5 years, they're going to go on 20% on top of that. I mean, that just can't be good news for us here, having to pay more for electricity, leaving less money for other things, and having us question whether we want to buy property or not, or whether we can afford it or not, especially if the interest rates go up.
Carrington Clark reporting. Well, it's the water cooler discussion that's dominating the energy debate. Just how high will electricity prices go? Alan Finkel's National Energy Review has been out for a week now, and along with debate around the clean energy target, there's been serious concern about massive power price rises. Already, electricity prices have doubled during the past 5 years, and prices are set to rise another 20% this year alone. AGL, Energy Australia and Origin Energy have all announced significant price hikes in the past 2 weeks, aimed at both households and businesses.
And finally, some contradiction. See if you can catch this. Michael McCarthy, he's the from CMC Markets, he's a reporter. It was just a market report from yesterday, so this was last night. And see if you can catch what I just caught.
Elsewhere, Asian markets seem to be trading higher today as well. What's lifted investors there?
Well, we've had some good data out today. In China, we learned about the housing market, and while prices are still rising there for houses, it appeared to have cooled somewhat, with less cities reporting house price rises. But we also had some...
So 4 stages of a bubble. Stealth, takeoff. Stage number 2, awareness phase. Stage number 4, mania, which is when the public comes in, which is where I think we are. And then a bull trap, return to normal, everybody thinks. And then the stage number 4, blow off phase, when the fear sets in and everybody capitulates and the confidence is lost. And then there's despair when it drops under and beyond the mean average value, and then it just recovers back up, but never comes back up to its former glory.